Cast is going to be on how to take advantage of the next Dow plunge and nail the bottom for explosive profits. In the uh, challenging market conditions that we've seen here as of late, certainly extreme amounts of volatility, an ever present cloudy economic view that most of the major network channels and analysts out there are presenting to everyone. VectorVest is very much keen on this whole concept of if the market corrects, it creates terrific buying opportunities, and we've certainly had a little bit of a downward leg into this current volatility that we find ourselves in here and now. And when we look at the current state of affairs on a very recent basis, it kind of presents itself as we might see yet another little dip in the market here, potentially in the coming days to weeks. And that, of course, could in fact present a terrific buying opportunity. So we thought this is a timely webcast, and we will clearly point out the ways in which we're able to take advantage of any future downside that the stock markets might present to us here in the coming days to weeks to even potentially months down the road. At some point, you're going to get a wonderful buying opportunity. You tend to get two to three of them every year. And so, this is not something that relies explicitly on what the market does here and now, but better can prepare you for whenever the market does take a more considerable dip and enters into an actual correction, things of that nature, how we can really supercharge our gains in the stock market and leverage those opportunities. So let's get into it and take a peek. I think it's going to be a good use of your time, to spend it with me here over the next hour or so, and we'll really kind of clarify things a great deal and make sure you're ready to go. Okay, so don't be fearful of market corrections. If you have the right system, market bottoms create explosive profit potential. They truly do. We're going to clearly indicate that in the webcast today. We're going to take a look at a few case studies historically and kind of look at where the market is today and what to look for in terms of future opportunity that might again be right around the corner. Okay, so let's get to it. My promise to you guys will be that you will learn the skills necessary to nail market bottoms with precision so that you'll never miss another explosive bottom fishing opportunity ever again. Guys, we're not going to be talking about bottom fishing throughout any given trading day. We're going to be talking about how to take advantage of market corrections. They lead to terrific buy points on stocks where you can see profits accrue over the subsequent days to weeks to months to potentially years. We are in the midst of still more than a 10-year bull market at this stage. And so we're in the later stages of a bull market at this point, but you're still going to get really good buying opportunities when a market has a correction. While they might not be as good as some of the opportunities that presented themselves back in March of 2009, for example, they're still a lot of fun. And when you get them right, you can really move the needle in your trading accounts. So that's what we're going to do. We're going to show you how to leverage these opportunities. Again, they happen about 2 to 3 times a year on average. Okay, more towards the two, but between 2 and 3 a year. Okay, so let's look at it. First, a little bit about me. That's, of course, the ugly one on the left there. Fortunately, it's a little fuzzy even, but that's me. My name is Steve Chappell. I'm the Director of Trading Systems Development for a company called VectorVest. And that's my beautiful wife, of course. And that was a wonderful trip up to Asheville, North Carolina to the Biltmore estate up there. But anyway, I've been with VectorVest now for 19 years, going on 20. And VectorVest has been around a long time. I know some of you might be running across VectorVest today for the first time. You've probably heard of us at least. We've been around since floppy disk. If that gives you any clues. And actually, before that, VectorVest used to be sent out to subscribers in a 3-ring binder about once a quarter called the VectorVest Stock Advisory. So VectorVest has been in business more than 25 years now and is alive and well and thriving, and so we want to bring some of what we do to you guys today so you can get a feel for it. This is just one aspect of what VectorVest can do, but it really is one of the more powerful aspects in that nailing market bottoms can be very tricky, but we've got a tried and true methodology that has nailed more than 35 bottoms in the last couple of decades, and we're going to be sharing that information with you here today. Okay, so Yeah, frustration, right? In missing the big opportunities. I think that's why many of you are, in fact, attending this webcast. You want to get a better feel for how to maximize those opportunities and be confident that you're maximizing the opportunities at the right time. Right? In other words, a lot of times what we do is we jump the gun, we get in a little bit early, get burned, and then when the big rally comes, we kind of miss it because we got burned trying to anticipate it before it actually happened, or we find ourselves slow to the table. In other words, market has taken off for a couple of weeks and a lot of the great returns are right down there at the bottom. The first several days to maybe the first several weeks is where the explosive gains are. And so we're going to be talking about how to nail this down. Precision is going to be key. And so you'll learn about that as we go through. On our journey today, first thing we're going to do is you're going to learn about the system that I use to make precision market entries at market bottoms. You're also going to learn three key attributes on how to pick the best stocks at those times. The three key attributes that the stocks have in common, the best ones, the explosive movers. Okay. Then we're also going to look at the 5 trading tactics that are going to make and preserve that capital, the explosive gains off of those bottoms. Some of them are, fairly simplistic in terms of practice, which is great, makes them easy to do. But they are going to be 5 things that truly get the job done and get it done right. So we're going to share each one of these things with you in the next 45 minutes to an hour. So just kind of sit back, relax, and enjoy. And I think you're going to find it very, very interesting, to say the least. Now, what's the hardest part about nailing a market bottom for you? This is kind of where I just want to get a feel for the room, cut the ice here a little bit, and see who I'm talking to and what kind of experiences you guys have had in trying to nail market bottoms in the past. What's been the hardest part for you guys? And so I'll take a sip of coffee. I'll be right back with you. All right, so I've got some answers streaming in now, and forgive me if it seems like I'm not able to read them well because now the thing is spinning pretty quickly. But let's see. Timing. Yeah, timing's huge. That's the single most difficult part. I will tell you this, if you get timing right, you can do just about everything else wrong and still do really, really, really well. So timing is huge. It's absolutely the most important part of what we're going to talk about today. It's scary. It's scary. Not know. Yeah, you know what's interesting about the scary part is on the best buying opportunities. The buying opportunities of a lifetime. Usually, you're going to be buying when you feel like it's absolutely the worst thing you should be doing at that moment. It's going to be about the time where you feel like you should be stuffing money into your mattress. Warren Buffett said it best. He said, investors need to learn how to buy when blood is in the streets. And that's a scary proposition, for a lot of folks out there, private investors who don't have a lot of experience in doing these kinds of things and so on and so forth. So, yeah, it can be very scary, particularly if you don't have the confidence that you know that you're going to be doing it right. So that's going to be huge. I mean, that's going to be a big part of the webcast today. Some people are saying always late. Some people are saying too early, and everything in between. So this is good. That gives me a good feel. It's typical of what we see, and that's usually the case. But so I keep waiting for that kind of outlier, but that's good. That means that this webcast should hit the mark for everybody that's in the room in one way or another. And you got to there's really 3 things that we got to know. We got to know when to buy, what to buy, and when to sell, right? When to buy, what to buy, when to sell. And as long as we get those 3 things right, I reckon everybody's going to learn something today. Okay, so let's get to it. Let's get to it. We'll talk more about that for sure. So before we begin all of that, though, I think this is going to be an eye-opening part of today's webcast, is that in order to do this right, this is the trick. This is the outside of the actual getting the system right. This is the hardest thing for you to do. Is the mental side of things. We're going to have to make a paradigm shift, and paradigm shift. It's kind of some Covey terminology. I've seen it in a lot of Covey classes and things. It's probably used elsewhere, I'm sure. That's where I'm most intimate with it. I've gone through a couple of different Covey courses over my career, but what paradigm shift means is we're going to have to do a new way of thinking, a new way of thinking about our investments. Um, so traditionally, what VectorVest does and really shines and does well is we place our investors in buying rising stocks with rising earnings and rising forecasted earnings. So it's not just how well has the company done today and done compared to last quarter in the prior year, which is all too often, what most investors tend to focus on. What we focus on is that blue area shaded graph at the bottom. That's actually a forward projection of where earnings are going to be 1 year from any one of those data plots. So if you focus on, say, the ones here in February, that's where they should be February of 2018, not where they should be, in the short term, but where they're going. And so if you've got a situation where you've got smooth, steady rising stock behavior, a lot of times that's the result. In fact, almost universally, that's going to be the result of this is a company that's growing their earnings quarter after quarter after quarter, year after year, and they plan to keep doing so in the future. The forward guidance type of situation there. So, this is traditionally the best way to go. I mean, if you buy baskets of 10 to 20 of these kinds of stocks, your propensity to make money is enormous. It's very difficult not to. Okay, provided that you stay on the right side of the market, you don't, continue to buy even these kinds of stocks when the market's going down. What we need to learn how to do is let the market go down, run its course, and then transition into buying these kinds of stocks. And here's the shift. We've covered it to some degree with what Warren Buffett even said, buy when blood is in the streets. That's exactly the kinds of stocks we're going to buy. We're going to buy stocks where they have been the bloodiest. So every market correction, there's going to be certain industries or sectors or groups of stocks that get hit more than others. And we're going to be keying in on the stocks that essentially have been beaten down the most, but still have some value to them. Just not absolute garbage. That's another trick. You don't want to just, although you can get away with it, you don't want to make that a habit. You don't want to buy just garbage. You want to have some kind of characteristic to the stock that is more than just it's been bloody, and that is, maybe they're are actually making money or whatever the case may be. We're going to get more into those details. But it's different, Instead of buying the stocks that are already doing what you want them to do, they're smooth, they're steady, they're rising in price, they've got terrific forecasted earnings growth, and so on and so forth. No, not so much. We're going to find stocks that have a similar caliber to that, probably not quite as strong, but who have just been smoked in stock price. I mean, just obliterated. The more the better. And so you're going to get a chance to see that in this webcast on full display. Don't worry, we got to work through the terminology, and we got to work through the 30,000 foot view to give you a decent picture before we dig in and actually show you some of the actual result, okay, which we will do. The frustration, of course, becomes when you try to nail those stocks that have been bloody, is all too often, as some folks mentioned when I asked the question, what's the hardest part? They said, well, my timing's off. I'm either too early or too late. And a lot of times it's human nature to be more so the early, if you're going to try to time it, if you're going to try to nail the bottom, for example, what you'll find, I think, eye-opening is oftentimes we're on the front side of things where we're a little too soon to the party. And we might get some rally, but it just kind of peters out and the stock market ultimately continues to move lower. So just a simple stochastics, or some kind of technical indicator like an RSI or whatever that are really good at looking for oversold conditions. What they're not good at is looking at the internal market makeup or anything fundamental whatsoever. It's purely technical situations, and so you can have little mini bounces and things that don't materialize to much. So what you're going to see is a new way to do this. It's not going to be just applying a stochastics to the Dow, and looking for a good buying opportunity. That can lead to too many false signals. So let's get to it. Let's get more to it, because we got to fix this. What the problem is, if you just rely on even what listen, I use stochastics and RSI all the time. Okay, they're great indicators, but again, we've got to cope with this problem on timing the market, and we need more. There's more to the story. Something's missing with just those indicators alone, and so let's get to it. Here's the problem: the system's incomplete. There's not enough information there to really make a sound decision that the market's getting ready to blast off for weeks to months to years into the future. So we're going to talk about the fix, how to get that done, how to fix that problem once and for all and for good, if you pay attention here. So let's do it. Ultimately, though, you got to know this: your system determines your success, and system and success are the two key words. It needs to be systematic. There cannot be any guesswork. It needs to be something that's repeatable, and it needs to be something that has proven itself time and time and time again, historically, and even after you implement, right? The good news for you guys: we've been teaching this core concept now for more than a decade. And a lot of it at the time we started presenting it was based off historical information that we saw work really well for us a few times. Then we started to teach this concept, and we've continued to teach it ever since. And I've been one of the main purveyors of this knowledge over the years, along with Dr. DeLito. We kind of worked on this together. Obviously, Dr. DeLito put yeoman's work in there, as he always does, putting all of this really together. But, I think it's important you understand I've been teaching this for a long time. It's not anything new. And there have been many, many bottom fishing opportunities that have been truly explosive ever since we started. Okay. So a lot of people and a lot of subscribers that I talk to, a lot of times they'll come up to me when I'm at a show or something, and they're like, "Gee whiz, man, I'm so glad I learned that information, because you wouldn't believe, what that's done for me." So I hope it's going to do the same for you. Here's the good news: it's easy. It's not hard. Okay, it really isn't. You just got to know what you're looking for and what to do. It is very much a 1, 2, 3 methodology. There's nothing, you're not going to need to do extraordinary amounts of work here. It's going to be pretty simple. So let's draw it out, and then we'll go look at it. Okay. First thing that we're going to need is we're going to need a mechanism to tell us when the bottom is actually here. When do I want to buy? And we need that to be precise, as you'll see in a moment. We also want to know what we are going to buy, because we're not going to buy traditional household names. We're not going to be buying Apple, Facebook, Netflix, Google, your FANG stocks, those kinds of things. If you do, you're going to come out ahead. You're going to come out quite well, but we can do better, and I'm going to show you how. Okay, and then we're also going to learn when to sell. And that's where the rubber meets the road. Our founder, Dr. DeLito, here at VectorVest, comes from the tire business. He was the head of the chemical engineering department for BF Goodrich Tire back in the heyday, back when BF was everything. And large parts probably because he was there, to tell you the truth. Really brilliant man. And we're going to be, divulging this system that he's put together and showing you how he does all this. But when to sell is extraordinarily important, because that's where the rubber meets the road, and that comes from the tire business, right? Where the rubber meets the road, and that's the inflection point, right? That's where profits are made or lost. So we're going to cover each one of these, and when we talk about when to buy, we're going to talk about precision. Not just, I think it's a pretty good time, this might be an opportunity. We're going to say this is the opportunity, period. Okay. What to buy, we're going to talk about the ones that truly have the explosive upside. We've talked about it to a limited degree so far. We have indicators to tell us about how bloody things have been. We have indicators to tell us how there is some actual good attribute to the stock, even though it's been bloody. Okay. And then when we get to when to sell, we're going to follow a system that's going to cut our losers off quickly and let our winners run. And the reason we want to cut losers quickly is twofold. We're going to be buying stocks that are in just absolute torrential downpour in terms of stock price. They are falling like a rock. So we do not want to see one of our positions go south on us, 20, 30, 40%. We want to, inevitably, we're going to buy baskets of stocks. We're going to cut the ones that keep falling quick so that we can get another one. And, by establishing likelihood, what's going to happen here is we're inevitably going to land on a basket of stocks that's going to shoot up like a rocket, essentially. So let's talk about it. We're going to break each one of those things down individually. First things first. timing. We said timing is everything. It's right here on the slide. How cool is that? But we need precision. Since timing is everything, we need to be precise. We need a precise way of doing it. Okay. So we have people that are with VectorVest. We have people that are not with VectorVest currently. So I'm just going to start with a slide of the DOW. Okay. Everybody understands what the DOW is if you've been investing for any length of time whatsoever, right? So this is a chart of the DOW. This is historical, which is fine because this is kind of a full circle turn of events here. You have a market that's nicely rising for a long while. So I've already said we've been in a bull market for 10 years, right? This is one of the legs up. This is back in late 2017 before we hit 2018 and the wheels came off. Okay, so that was a correction. This correction here in February of 18 really started late January, to tell you the truth, but it was sharp, it was swift, and it was painful for a lot of folks. I love these things because what they do for me is we've got a system to tell us when to get out to you guys, but we're going to focus on entering low. That's the focus of this webcast. I'm not going to be dealing with, how you could have cut out of that correction pretty quickly. What we're going to deal with is how do we get in, how do we get in near that bottom, right? With precision. So lo and behold, this right here is the second green candle is where we're talking about entering. Okay, the second one. Now you can see that there's a 2-bar pattern just 3 bars to the left of that green section where it looked like the market was going to take off then, but it didn't, and we weren't surprised by that. So when we talk about precision, we're talking about precision, man. We're talking about nailing the entry early. We're not talking about buying the absolute day that the market hits bottom, but we're talking about buying the absolute day that the market takes off and continues from there. Okay, so let's get to this example because this will be eye-opening in and of itself. If we look at the February low of 2018, which culminated, I think, about the 9th of February, if I remember my facts correctly, okay, really began to take off on the 12th. This is Apple, same time frame. It actually bottomed on February 9th, which is the dragonfly doji down there at the bottom. And then that big tall green candle is in fact February 12th. When the stock market took off, so too did Apple. So if we know how to do the timing, we can buy these, big behemoths, these great stocks, and we can get really great pricing and we can do pretty well. We can probably beat market performance and really maximize exposure into great stocks. But again, we're going to talk about how we can outperform even that. Okay, so the missing piece here is precise indicators for when markets are bottoming and ready to absolutely blast off. And so there's a couple of things that VectorVest, our software company, is going to provide. First thing is going to be the newsletter. And you want to stay tuned into the newsletter because it'll give you some good clues about what we see developing in the stock market. This is an essay that was written and it stood the test of time now, obviously. It was back in March of 2009. The stock market took off on March the 10th, okay? This was written on March the 6th. It said the market is itching to rally. If history repeats itself, we will soon have a bear market rally, which will peter out, then the bulls will stampede again. Now, to me, what that means is we're about to have a rally. And when that rally dies off, it's not going to be long before we rally again, okay? So that turns out to be very, very prophetic, doesn't it? Now, some of you may need to get a little bit of exposure to exactly how good this was. Then what we're going to do is, I said earlier, we have more than 35 examples of when VectorVest called a bottom for you here in just the last couple of decades. Then we're going to take a look at a little bit of a sampling and even see kind of where we stand now, from a timing perspective. So just for the moment though, remember this March 6, 2009 date. Okay, I'm going to go over to VectorVest. So this is the tool that I use. Again, we've been a software company since floppy disk. Program didn't look this good back then. I promise you that. But here we are, and this is the new Starship Enterprise right here. This is this is the best we've ever had. So what I'm going to do though is we have a tabbing structure up here at the top. I'm going to go right up here to the timing tab. On the timing tab, I'm going to go to what's called market timing graph. Now, we don't predict, we react to what we see, okay? We look, most of the time we're following trends. With the exception being market bottoms, we're really going to be detailing how we know that we're searching for a bottom and when the blast off occurs, right? So I'm going to go to the MTI layout. This is your default layout in VectorVest. This is the current picture. Market's been volatile. Each subsequent rally here so far has been shorter and shorter lived. Got a little bit of a bearish pattern building here actually. This is known as an ascending triangle, and sort of, nothing is 100%, but the likelihood is we may in fact run a bit lower here over the near term. It's certainly possible based upon what we see here. Okay. Now if I go back, what I'm going to do is just take a little tour through time for a moment. So I'm going to go back to when the bull market began, which seems like a lifetime ago, I know. But you can see that since the market bottomed on March the 9th of 2009, we have been, in fact, in a bull market. You'll also notice at quick glance that there are times where the market pulls back into a market correction, and it happens about 2 to 3 times a year, okay? Just as we said, there's some in there that don't look like it that actually are, because we're looking at so much data here. Okay. Now, what creates opportunity, what creates the blood in the streets, as I drag back just a bit more here, are market corrections. And so here's around November of 2007. That's when we kind of hit peak on the prior bull market from 2003. All right, but this market decline, that's what created a buying opportunity of a lifetime. The stock market's corrected a great deal in 2 consecutive down waves. There was a little bit of upside through the month of like April and May into about June 11th of 2008, and then the wheels really came off. That was the nastiest of the downdraft. But long story short, a couple of things. For those that are brand new, I said I wasn't going to show you how, but I will show you that we made the call. So I'm going to zoom into just this area here on the chart, if it'll let me. Come on, program. May have to reopen. It's a bit odd. Come on. All right, let me try that again. Yeah, I'm gonna have to close it out. Well, I've got a YouTube cast running. I've got a GoToWebinar cast running. Maybe that's putting a little extra on the machine today. I don't know. All right, so let me go open this back up. Bear with me just a second. Now you got my password. Look at that. 12 dots. That's all you got to know. All right, let's see. Easiest password there is. Yeah, you can use a weekly chart, but to show the precision, you need to see the daily bars. You with me? Okay. All right, so let me go to, try this one more time. I'm going to go to graphs, market timing. Different way to grandma's house here, but it's fine. I just want to get back to that same time frame. And I may not zoom in is what we'll do. I'm not sure. I just don't want to put us in a situation where it doesn't work again. So I'll just show you this. I'm going to use a date line and go here to 11/2. Now I know it doesn't look like much now, but if anybody's been investing since 07, 08, 09 time frame, you know this was quite painful, right? One of the worst markets, one of the 3 worst in the last 85 years or so at this stage. So it was horrific for most investors. One of the things I want to show quickly to those that have never seen VectorVest before is remember that date. That's pretty close to the double top right there, right? If I go to November 2nd, 2007, I'll go to our newsletter, and I just want to prove to you some of the salt that you're dealing with here in terms of, yeah, proving our salt, showing you that we know what's what. On November 2nd, 2007, we wrote about contra ETFs. We wrote about how that's going to be your best opportunity here for months to come, okay? And we also wrote in this essay, a word to new subscribers, the confirmed down signal that we received yesterday could be the entree to a long bear market. We're not there yet because earnings are still rising according to our method of analysis, yet we no longer appear to have the support of an accommodative Fed, and that can make things very bad for the stock market. So do not be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. Just follow our market timing system and it will tell you when to go long again. At that time, we should be getting some wonderful bargains. Okay? So that in fact happened, right? If I go back to the graph, I'm going to go to the big granddaddy. I mentioned that there was a buying opportunity from about April 3rd up through about June 11th of 2008. I'm going to fast forward right to the big boy, which is March the 9th. This is when the bull market began. And so I'm just trying to get my date line there without zooming, which is, you get the point. It's 3 days before that. Actually, there was a weekend. So we go from March 6th to March 9th to March 10th. Okay, but you get the point. What's the market done from there? Let me go back to the newsletter. Just quickly show you this. And then we'll get into how we do it, okay? A little bit. So I'm going to go to March. I'm going to go 2009. We're going to go to March 6th. Here, in fact, is that essay I referenced in the PowerPoint, and that is that the market is itching to rally. Here's a bevy of indications that we see happening in the market that are telling us that the market is itching to rally. And then when I get down to the strategy section, which is more about implementation, there's even more specific information as to why we believe that we should be on lookout for a market bottom. It has to do with the fact that the stock market is showing us an awful similar structure and pattern to what happened on the back of the tech bubble collapse that culminated in October of 2002. Okay? And we're seeing things in March of 2009 that look an awful lot in retrospect to what was happening in October of 2002. There's more to that, of course, but that's the main theme there. What it says here is what this means, not, brass tacks. We're still going to be short, market's still going down, but it says for those of you who are riding the wave, we are still playing the downside of the market with those contra ETFs from the buying contra ETF strategy, which is located blah, blah, blah. But we're going to exit those positions and go long with one of the following strategies if an explosive rally occurs. So we're waiting for not just any rally, but an explosive one. So why are we waiting for an explosive one when all the market has done is exploded downward for the most part over the last year and a half? Well, that is the trick then, isn't it? But lo and behold, just to show you, if we fast forward a couple of days, notice we indicated some strategies too. You're going to see those same strategies here. And what it says is news that Citigroup has been profitable in the first 2 months of 2009 sparked a major rally on Wall Street, driving stock prices sharply higher. Presuming that the rally continues tomorrow, and with 3 yellow lights, prudent investors may go bargain hunting and bottom fishing. This is March the 10th. If I go back to the graph, that's pretty good, right? Was that a good time to get some bargains, you think? Oh boy. Let's see. So back in the views, we will also present a list of strategies, or had been, and what we did is, for those of you who are riding the wave, we went long today on March the 10th, the day of the blast off. March the 10th was the day of the blast off. March the 10th was the day of the blast off, okay? For those of you who are riding the wave, we went long today in our model portfolio with jailbreak, no contras. This is the best bottom fishing search we got by a wide margin. Does it work every single time? No, but it's worked 32 of the last 35. So, you know, it's uh, it's about as good as it gets, honestly. If you're gonna pick one, if you're not sure where to go, I'm going to show you how you can figure out exactly where to go in a little bit. But if you're not sure where to go, this is a good place to start. Okay, that's the way we went. And if I go back and let's go to Unisearch now. So we also have on top of kind of the track record, you can go back and see what VectorVest said on any major turning point and anytime from 1995 to now. You can go back, open that market timing graph, land on a spot, come into the views, and see what we said. And what you will find is going to blow you out of the water, man, if I haven't already. Okay? Because we're not some one trick wonder. This isn't the only time we called a bottom. It just happens to be the best one we've ever called. And I'd be a fool not to show it. Okay? So you can find 35 of them. All right? Now, what I want to do though is just kind of hit home how important this can be in terms of profit potential. So far, all I've showed is how good we can get with market direction. I'm going to show a little bit more on how we called that bottom. Then I'm going to go run this strategy, and we'll see how we could have done. Okay, so I'm going to go back to the timing graph, which I think I put in the graphs tab. So give me just a second. Man, my computer's running really crazily today. Hmm. I had my normal trading room chat this morning didn't have any problems. Weird. Oh, good golly, Miss Molly. All right, well, let's try this again. Luckily, I know this like inside and out, so this doesn't throw me off my game at all. I'd be dead if I was following some kind of script or something. All right, so here we go. Let's go back to the graph here really quick. Let's go to the market timing graph. And let's try this one last time, then I'm not going to mess with this anymore. Okay, so let's go back here, and I do want to show kind of some of the things in terms of how we called it. Okay, so a couple of things here. On the top, this is the stock market and its performance. It's represented as candlesticks. Um, that is an average of the 8,600 stocks that we track. Okay, so it tells you if the stock market's going up, if it's going down, what have you. On the bottom, we have indicators, and we have indicators that are going to go miles beyond just throwing a stochastics or an RSI or any kind of overbought or oversold indicator you've ever used before. Why? Because of a couple of things here and a couple of big things. Let's start with the buy to sell ratio. The buy to sell ratio is an indicator for us of how many stocks in the database have buys and how many have sells. And so you can think of it as a barometer of health. Is the market healthy or unhealthy? Stochastics doesn't tell you that. It just tells you if price has gone a little bit too far from where it should or not. This is looking at sort of the internals of the stock market because fundamentals are part of our buy recommendation. Whether those of you that have been with VectorVest for years never knew that before, you do now, or those that have never seen VectorVest, before at all. In our buy recommendation, because we factor in some of the indicators that we do, fundamentals are a part of the picture there. Also, a part of the picture is stock direction. But what we're seeing here is that the market, when it gets down to zero point 0.2 or below on that indicator, you're searching for a bottom. And so if I use the date line here and just kind of go to that March 9 low as best I can, I'm not zooming in based upon our recent experiences here. This is March the 6th. That's the bottom when we wrote itching to rally, right? So let me just go down here. Buy to sell ratio is at 0.07. So we've already been searching for a bottom for a little while, and that's usually the case. So that indication alone doesn't tell you that the bottom is here. It just tells you that you should be on the lookout for one. What might be interesting for you is that we're not at those levels today. Okay, we're not below point 0.2. We got pretty close. But that has been a tried and true mechanism. That has been something that has stood the test of time for more than 2 decades now. Okay. The other thing that we're seeing here is you can see these purple lines that are drawn. We have lower low on the stock market, but we have higher low with all of our indicators. It's just easiest to see it with this one, which is called relative timing. This is purely a price indicator at this point. So this is a very fast, smart, intuitive indicator on price trend and price direction, the dynamics, the magnitude. It's a very sophisticated indicator, a lot like a stochastics, but actually a little bit more informative, to tell you the truth. But what we're seeing there is at the time that the stock market is making lower lows, we're starting to make higher lows. We're seeing some divergence. Okay. Now, so in calling a bottom, kind of the ultimate situation, you want the buy to sell ratio below zero point 0.2. You want the market timing indicator below zero point 0.6. It's not a requirement, but when the MTI, this one here, goes below zero point 0.6, it's going to be an even bigger bottom, typically. Okay. So zero point 0.6 or below on the MTI, zero point 0.2 or below on the buy to sell. These divergences are also then indicating that the rally could be imminent if we start to get our explosive day. So while I can't zoom in, the thing that happened on March the 10th that was the tip off is the futures were up huge. So we have some metrics built around huge. What do we want to look for in terms of futures? And we'll get more to that later. But I'll never forget that day because the futures were up the most I'd ever seen them in my lifetime, percentage wise, on March the 10th. Wouldn't you know it? The They were up 4, 5, and 6%. The major indices. I can't remember the order per se anymore, but 4, 5, and 6% before the market even opened. You know, and while we're seeing some pretty volatile days here lately, you're only seeing numbers like 1, 0.8%, something like that. So that's usually a pretty good clue. But we've got some metrics built in for what is explosive day. We've got some things to look out for during the first 30 minutes of that next day to help get you that pinpoint precision. But what I've given you so far gets you about 80% of the way there. Okay. All right. So let me go back over into PowerPoint here, and we'll keep moving. So here's another couple of bottoms where all of those things were in play. Now, the lower low and the higher lows, the divergence part, was only in play on the first one. Again, those are usually the bigger, better bottoms. That's usually the first one that marks a sequence of good ones to come. You see what I mean? But each one of these arrows represents a bottom fishing opportunity by way of the metrics that I just presented. So you had February. This one was actually, that's not even the Feb 16 low. I don't think. Well, yeah, it is. That's Feb 16. All right, cool. So Feb 12, the market hit bottom. Feb 16, it took off like a bird. Okay. Then here's the election. Believe it or not, the election was one of your better bottom fishing opportunities, and you could have been on the day it blasted off. Buying the right stocks, you could have done well better than you could ever possibly imagine. And then, unless you did it, and then here's the one that we started things off with today. So you can see there's 3 here within the span of just about a year. In fact, right on a year, there's 3 bottom fishing opportunities from 16 to 17. Okay. All right, so when we get that part right, I figure we can get into Apple right where that arrow is early in the day, and we can do well. But we're going to do better than well. So you'll see that in a second. But the first strategic shift we got to make is away from uncertainty and onto precision. Guys, if you just follow the rules that I've given you so far, you're going to do very well in your bottom fishing. All right, so let's see what we got coming next. Let's talk about what stocks to buy. Okay, so Explosive. Steve, define explosive. You've been throwing this term around, explosive, for like 30 minutes so far. 45. My goodness. Um, what is explosive? Quantify that. Well, in simple terms, what I mean is we want to buy stocks that produce double digit to triple digit gains in days to weeks, not years. So VectorVest, can show you all kinds of ways and opportunities to make double to triple digit gains in years. What we're going to be talking about is how to do it in sometimes days, even the triples. Sometimes those are going to be rare, but welcome when you have them. But the doubles, we can hit a lot of doubles, a lot of doubles. Occasionally, you're going to hit a home run. So let's get to it. Again, we got to move away from only buying stocks we'd be perfectly happy with if the market shut down for 10 years, your apples and so on. What we got to do, because of this reason. Here's how, on that February low, that very first bottom on the most recent chart where we had the three green arrows, if you bought that bottom precisely, here's how the top stocks that you probably think of anyway in the stock market performed. Amazon went up 41%. That's a pretty good start. Facebook 17, Home Depot 15, Disney 11, Visa, one of the best stocks in the market, 10.61, Google 4.53, Apple, what? Apple went down. Gilead Sciences 7.4. Gilead Sciences went down. Okay, and so the S&P, if you just bought the index, is up 9.6. Okay, the S&P, if you just bought the index, is up 9.6. I'm sorry, this is the stocks. The S&P is up 10.6. So the S&P beat the stocks. The S&P beat those stocks, beat the Amazons, Facebook, Home Depot, Disney's, Google's, Apple's, Gilead's, Walgreens of the world. Okay, that's frustrating, right? What's not frustrating is you made $1,936 on 20,000. That's not too bad. What is frustrating is the market beat you, right? You couldn't beat market performance even with those great stocks. So what we're going to do now is talk about how to beat market performance, man. That's where the money is. We said explosive. We don't want single digit, double digit returns. We want to get some of those triples too. So let's see how we do it. What we're going to need are powerful searches, powerful scans. Some of you are more familiar with the term scan. But inevitably, what our scans are going to do, this one's called bottom fishing in rising industries. Okay, you probably can't read that on most of your, especially if you're on a portable device. But the search is titled bottom fishing in rising industries. This is to be used when you go bottom fishing, not when you're not bottom fishing, not when the market's been on a 6-week tear. That's what you don't do, is use this then. What you do is use it when you're at a bottom. Okay, and the stock recommendations, if you look out here to the right, you see all that red with the S? That means sell. All these stocks are rated sell. But the other couple of common themes that they have is, see this RV column? That stands for upside potential. And what that means is these are companies that if the RV is well above 1 on a 0 to 2 scale, that's favorable, right? That's favorable. And if it's well above 1, that means they have good earnings and earnings growth, is the main story that I want to get across. Okay, there can be some other factors there, but that's the main thing to consider. Um, so we're going to be finding stocks that have sell recommendations that have terrific upside potential, but they've just been creamed in price. So RT is really low. Relative timing is on a 0 to 2 scale, you got 0.07, 0.1, 0.1, 0.1, 0.1, 0.1, 0.1. See what I mean? And so that leaves you with this group here. Helix Energy, Hornbeck Offshore. You probably know a couple of those names, but not all of them. You know. And now, if you're really astute, you might say, well, those are all energy stocks. I wouldn't buy 10 energy. Correct. We're only going to buy 2 of these. And then we're going to have to keep going down the search until we get 2 stocks that aren't in the energy space and buy 2 of those. And we want to have a well diversified portfolio as well. This is still, I'm giving it to you in small bites. But the message so far, if we use the market timing mechanisms that I told you about, we're going to get off the ground running the right way. Then if we run these bottom fishing scans, it's going to give us stocks that have decent fundamentals to sometimes really good ones that have just been creamed by market performance for really no other reason other than either the underlying asset that they control is not done well or the stock market's gotten killed or whatever. Okay. All right. So let's go over to VectorVest quick, and I'll just quickly show you that that is in fact in the software and that there are multiple solutions here. Because when I go to Unisearch and I go to folder view, there's a searches bottom fishing category. Okay, and in here are all the searches. You've seen some of the names and some of the images that I've been using, and you've heard me talk about jailbreak. There it is. It's right there. You know, and if I run that back in March of 2009, and we'll just run it the 9th because we would have bought them the 10th. You saw how we did. Okay, here's the list: Century Aluminum, Citigroup, Financial, three-time leveraged fund, FFG, Huntington Bank Corp, Las Vegas Sands, woo, MGM Mirage. My goodness gracious. Let's see how these performed. Well, they're only up 1,406%. Now, here's the rub. You're not going to hold Las Vegas Sands from $1.42 to 54. You know why? You're too greedy for that. I am too. Be great to say that you would, right? But it's just showing the kind of potential that bottoms create. So, yeah, Las Vegas has gone up, Las Vegas Sands rather, 3,700%. The Financial Triple Leverage Fund 3,500, FFG 2,200, MGM 1,000%, Huntington Bank Corp 1,000%, Citigroup. They were the reason behind the whole takeoff, right? Up 483%. Okay, so if I just backdate this, let's see how they would have done in about 2 weeks, and then we'll go from there. So let's say that we only held them for 2 weeks to the 24th. Okay, 95% in 2 weeks. Almost doubled your money in 2 weeks. What? Let's go to the next one here. Let's go forward like a month from there. Let's go to the 24th. 208%. Let's go forward another month. Let's go to May, I don't know. You tell me. 22nd. We'll try to do a month. 289%. Let's go forward to June. Uh-oh, got a red chip. Okay, that's a down call. That's a down call in the stock market on July 10th. Okay, so let's just run it to there. 218. See how we gave away about 80%? So, worst case scenario, assuming some slippage here, if you just held from when we said buy to when we said sell, which was that red tile, that's the confirmed down call. Same thing we received in November of 2007, except this one wasn't to say it's going to be the next long bear market because we're still in one technically. But you get the point. There's going to be times where we say to buy, times where we say to sell. It's all mechanical, and that's, realistically, let's factor in some slippage. You still could have more than doubled your money. Well, more than doubled, probably tripled, more like tripled. Okay. So that's that. Now, if we missed it by just a day, let's say we just read the views the night of March 10th. Maybe we read it that Saturday on maybe we read it the Saturday on March 14th. Let's say we got in the 16th. Okay, so we're going to be 1 week late to the party here. Let's see what happens with that 218%. Ready? Half of it's gone. Half of it's gone. Just being a week late. Let's say some of you earlier said you're a couple weeks late usually. Okay, so let's be a couple weeks late. Wow, we went from 200% to 62, only 62, and then you start factoring in slippage again. Maybe you walk out of there with 50% gains. You think being precise on your entry is important? Hmm. You bet. Now the nice thing is, if I would have bought these on March 23rd, I've been pretty sure the market's going up and it's okay to buy stocks. But in those first 2 weeks, more than well more than 50% of my potential gains are gone. Okay. Whew, powerful stuff, man. Now you say, well, but you probably couldn't have done that, that kind of well recently. Yeah, we could have. Not as well, but pretty close. Close enough to prove the point. I'm going to go to December. Did you guys know that Santa Claus came to town December of last year? Really did for us stock market people, man. Stock market took off on December 26th, as indicated by VectorVest by the same metrics I just gave you earlier. Okay? And so let's see how these 10 stocks did for just the first few weeks back then. This is why you don't hold them forever. We've had a couple of down calls since then. But let me go back to, let's just do a couple weeks. 51%. 51% in 3 weeks off of the December bottom. Woo wee. Let's see what happens if we were a week late. We bought the first day of January because, man, the stock market's been on a roll and everybody's talking about it at the office, and woof, almost half my profit potential is gone in that week. Let's go forward. Let's be 2 weeks late. What? And now I got some big losers to contend with. What's going on here? Most recent buy signal wasn't in May, it was in June. So if we go to timing, market timing graph, most recent one was right here, June 4th. Now, a couple of things. Let me go to this low point. Is the MTI below 0.6? No. Not going to be a major bottom. Plain and simple. Not going to be a major bottom. 0.64 is not below 0.6. Okay. Next thing, buy sell ratio barely got to 0.2. I think it was the day before. 0.18. Okay, so it's like a rubber band. The more it goes below 0.2, the better the rally you're going to have. The lower the MTI goes, the better you're going to have. Okay, I think the MTI was in the 0.3s back in March of '09, as an example. But anyway, this was the blast off day. We can all agree on that. And if you'd known the rules that I explained in this webcast, when June the 4th hit, you could have known that that was the bottom now too. I will say this. One of the things that a lot of the searches in VectorVest were keying in on was petroleum, like with jailbreak. And that's about the worst thing that you can buy right now, then, or anytime other than very early in 2019. So, what I'm telling folks now these days that are taking my bottom fishing course that you're going to learn more about is I would focus mostly on the blue chips until we have a deeper correction, which may be coming or may not. But until we have a sizable correction where it's not just all petroleum stocks that are in the searches, what you want to do is run the blue chip variety. So if we go to Unisearch and we go to say blue chip bargains, you're not going to get as good a return as you would with say a jailbreak, but they'll do okay. They'll do well. They'll do better than just buying FANG stocks. June 4th, 5th. We would have got in the 5th, so we got to run it the 4th. All right, let's date this back. Let's go to about the 21st. 7%. Ooh, ha! That was from my marijuana stock webcast. Let's put SPX down here. S&P's up 5, okay? Now we're in blue chips, so this is what happens. You've got your Googles of the world. You got Tesla and Intuitive Surgical and PXD. But yeah, until the market, really makes a nice aggressive blood in the streets low, I think that I would lean more the blue chip to the S&P 500 kind of search. But again, there's a way to know exactly which ones to use. We haven't gotten to that yet. So there you go. I mean, but there's your answers. So let me go back into the PowerPoint. Ah, come on. The other thing is, guys, these returns are not intended to be this is like how you would have done. These returns are intended to illustrate the point that there we go. That how much potential there is. Because in reality, what you're going to learn in the 5 techniques here in a minute, we're going to spread our bets out a little bit. So you can't really get a true idea of how good bottoms are until you start applying the next set of rules. Okay, they can be even better, honestly. Usually they are. So, and when we get it right, instead of making 1 time or just under market performance, we can do 9 time market performance. So that same 20 grand can make us 17,904. Okay, it's a much better return in just 3 months, I would say, than the 1,700 bucks or whatever it was, 2,000. So we can buy stocks like Hornbeck Offshore and reap the rewards and get them fast, days to weeks, not years. This stock went from 6 to north of 12 in weeks. Okay. All right, so our strategic shift number 2 is shifting away from ordinary stocks, buying the stocks that truly have the explosive upside, and knowing what scans to run to get them. Once we know that, then we move to the 5 trading tactics that make money so that we don't just flush money down the drain. And we can sometimes do even better than what those quick tests represent. Sometimes maybe not quite as well, but you get the point. 5 of 10 stocks, 5 to 10 stock baskets. So we're not just going to buy one stock. We're not just going to buy 2 or 3. We're going to buy at least 5, no more than 10. If you buy fewer than 5, you're going to take on too much risk. If you buy more than 10, you're just going to continue to eat away at profits. I actually find 7 to kind of be the best answer typically. It's almost like a bell curve. Anybody remember the bell curve in school? Right? But somewhere between 5 and 10 is the sweet spot. I'd still, regardless of what I just said, if you're brand new, these things move quick. If you're brand new to the bottom fishing concept, I would lean towards the 10, which is on the lower side of the returned standpoint. 5 is better than 10, but it's easier to deal with. Okay? It's easier to stomach. These things move, man. They move. Okay, but somewhere between 5 to 10. Number 2, never risk more than 1 to 2% of your total portfolio value in any single trade. So, I've come up with a systematic way where, based upon a proprietary stop loss that we use called Profit Locker, you will never risk more than 1 to 2% in a trade. We're at the same time going to be using a 15% stop loss initially and still not risk more than 1 to 2% per any trade. Okay. A lot of times what that means is you're going to reduce the amount of capital that you would like to use and use the right amount of capital to do the job right. Okay. So this is not something where, like, if you got $10 million in your retirement nest egg, that you're going to take the 10 million and put it all on jailbreak. Not going to happen. Should never happen. And I'm not going to let it happen. No matter what the outcome ends up being. Okay. We're going to do things right. We're going to do it with some letters of the law that are going to keep risk in line. And what that does is allows you to actually do it and get there. If you put $10 million in a jailbreak in about 3 days, you are going to be hanging on by a thread, man. All right, let's see. Don't buy more than 2 stocks per industry group. Okay, so we like to spread our risk. We like to do multiple baskets, and we've got a definitive way to do that, which again is 100% automatable. And you can set VectorVest up to where it's going to do all of this stuff for you. Okay, and then just give you the stocks to buy. We're going to favor using ratcheting or trailing stop losses. We like to use Profit Locker. Profit Locker is patent pending. It is a VectorVest stop loss. It's the best thing since sliced bread. I'm not just saying that. I truly believe it. I've seen everything out there. I've seen these guys selling stop losses for $4,000 and $5,000, and that's all they sell. And they're a lot of times they're not worth the powder to blow them to hell. This is a really good one. We're going to give you some examples to it here in a second. But also, what we don't do in this technique is continue to bottom fish after the bottom has passed us by. So we're only going to replace, like if we start out a campaign with jailbreak, we're only gonna run jailbreak in the few days near the signal. Um, Once you get more than a week off the bottom, stop bottom fishing. Okay, because now those searches, remember, those searches are finding bloody stocks. If you're buying stocks that after the market has taken off for a week still aren't taking off, they're probably never going to do it. Okay, so we stop the process, and this extinguish allow your portfolio to extinguish. That means that we let our stop loss dictate the outcome of the trade, and after the first week, we're just selling stocks at hopefully profits, right? But we're not replacing them. We just take all of our hard-earned profits and we sink them back over into the retirement account, okay, or wherever you want, whatever you want to do with them. If it ends up being fun money for Christmas, or something to put the kids through college or whatever, that's fine. But what we don't do is keep bottom fishing. We put this hard-earned capital somewhere else where it's going to have a more sustained, reliable outcome for us. Okay. All right, cool. So here's an example of plug. This was a trade actually using Profit Locker. I don't have the Profit Locker points drawn here, but it shows you when we would have gotten into plug, when we would have got out. Okay. Very sophisticated stop loss. It's not just a moving average or a gain loss. It's more. There's more to it than that. So that when you start managing baskets of 10, no more than two per industry, using the Profit Locker. We like to use a 100 target on Profit Locker, by the way, and a 15 stop. 100 target, 15 stop. You can also use 50-15 for those of you that are VectorVest subscribers. What you'll find is the returns are about the same. You get a little bit better with the 115, actually, but the returns are pretty similar over the last 35 bottoms tested, and actually traded, and things. But I continue to compile kind of the archive of tests so that we've got evidence, right? But anyway, this was just on the Russell 2000 search that we have. Jailbreak obviously did a little bit better, but that's fine. It shows you that multiple searches are going to work. And this actually, the reason I chose Russell is this was the hottest strategy in the stock market on December the 28th, after the primary wave turned up and the bottom fishing date came into play. So we have a lot of people that have the Derby, things like that. But the Derby is a great resource for bottom fishing because our recipe for the past 25 years, our recipe has always been go with the strategy that's making the most money after 10 o'clock the day of the blast off. And what the Derby does is it tells you what strategies are going up the most at any given point throughout a day. And so all you do is you just scan down through the list, and whichever one's at the top, that's the one you go with. That's what we've always done. That's how we pick jailbreak. What we used to have to do is Dr. Delito would have to run the search, take the 10 stocks, write them down, go to Yahoo or wherever. He also had Interactive Brokers at the time, I know. And so you could do this in Interactive Brokers. You can queue up tabs in Interactive Brokers back then. Boy, what an ugly program it was. I had it too. But you could set up a tab for each search and kind of monitor the searches that way. That's how we used to do it, guys. We used to take all the different scans, take the 10 stocks or five, and watch them. And the portfolio that was doing the best, that's the one that we bought. Okay. So Derby does all that for you. Do you think these tactics can improve your performance? That's what I want to know from you guys right now. Do you think these tactics can improve your performance? Let me know. Yeah, I mean, the answer here is obviously yes, and it is. Um, I got people in the chat right now saying, well, you can always look good if all you do is go back and show what's happened in the past. You missed the part earlier where I said I have been teaching this course for 15 years. And I teach it the same way today that I taught it 15 years ago. Those are facts. Okay? All right, so let's keep going. All right, so strategic shift number 3 is knowing when to sell, kind of not knowing when to sell, and then knowing precisely when to sell. That's going to go a long ways towards giving you optimal outcome. Okay, so we can skip that question. Ultimately, your system is going to determine your success. We feel like we've got a very well proven system that has nailed 35 market bottoms in the past year, and one that's good enough to say we don't even have a market bottom right now. Okay, don't. It's as easy as one, two, three. You're here today, I figure, because of maybe one of the following reasons. You're sick of missing out on some good opportunity. Uh, you want to maximize those opportunities, right? And so we've made the shifts, throughout the webcast. So what I'm going to do is just get to the choice, because that's where the rubber meets the road now. And that is, I have given you enough to do it alone. I absolutely have. And I want you to know that. If you're a VectorVest subscriber already, if you're not, I haven't, you need to have VectorVest. But if you just, this is recorded, if you just play the recording, I gave you 80%. It's old Pareto's law. Has anybody ever heard that? Get 80% of the outcome with 20% of the effort. I've given you the 20% in this webcast to have good outcomes. You're there. You can get 80% of what's possible at any market bottom in the future if you're really paying attention. And some of you were. Okay? But ultimately, you are going to make a few mistakes. There's some tricks of the trade and some things that we've learned over the course of the years. Here is actually one of our students who is now works for VectorVest. His name is Rob Markham. If anybody's from Australia, tell Rob I said hello. I miss him dearly. Every time I see his face, it reminds me of some of the good times I had when I went to Australia and spent a few weeks with Rob and helped, kind of get him rolling out there. But Rob came to us because he went through the traditional situation that a lot of people had to suffer through, which was the 07, 08, 09 kind of debacle in the stock market that caught too many people off guard. You're on the better part of a 5-year bull run. Life is good. Fed makes a final fatal flaw. Stock market takes a tumble, and then all these leveraged devices and things started to unravel, right? And things got pretty nasty. So he lost about 40% of his nest egg, which actually was pretty good. I know people that did a lot worse than that, okay? But he was able to get all that back and more in just a few short months doing the very same things that I taught in this webcast. Very same ones. He bought Jailbreak March of 09, okay? So, precision bottom fishing, you guessed it. You know it's going to happen. We got a course we'd like you to attend. I feel I've given you enough to where you can do it now, honestly. But if you want to get everything right, then you have an opportunity to do this. So no matter who you are, some of you look upset that I'm trying to teach people definitively how to do it, and I can't do it in an hour. Others of you love it, right? So no matter who you are, if you're one of the people that doesn't love it, I already gave you enough to do well. If you're one of the people that wants to do better, here's a way to do that, So you got 6 online modules. This is from our last course, and it was on the tougher one. It was on the March low, was around when we did the course. So it can be eye-opening. There's some things that are that you kind of see us going through around that time. So it'll be interesting. But 6 online modules. They're up there to train you up and get you to where you're 100% crystal clear on exactly what to do, how even to put it into a template that just sends you notifications on what to do. If you want to be that hands off, it just takes 15 minutes to kind of set things up, and from that point on, for the next several weeks while the stock market's rolling, it'll just tell you what to do. Okay. So in the course, we're going to have our first module is on the correct mindset, making that paradigm shift. It's also great for new people. Like if anybody here is super interested in this thing now, I don't blame you for obvious reasons. The other thing would be this, is we're going to spend some time in this first module showing you the lay of the land of VectorVest 101 as well. I lightly covered some important things today, like relative value and relative safety and relative timing. We're going to cover them a little more thoroughly here, so at least you have grassroots what VectorVest is. Okay, a little bit more on how we time the market and so on and so forth. So all of that's going to be in Module 1. In Module 2 is how to spot the bottoms with precision. So we kind of go through things with more of a fine-tooth comb. What are the metrics for explosive day? You know, what are some things that I can see in price structure that let me know that the bottom is maybe tomorrow, and so on and so forth. Okay. In terms of powerful searches, we show you a few ways that you can land on some of the better searches. We've got a lot of evidence-based information that we will share with you. I clearly detail what I think are the 5 best strategies in the bottom fishing folder. I also share with you in a little bit more detail how the Derby can pick the winner. Okay, can pick the exact one that you want to use. Also in Module 4, that's going to be more on the 5 rules trading tactics that we just covered and how to automate it, how to put it into VectorVest so that it'll do it for you. And then your definitive guide. Definitive, I chose that word on purpose. Definitive means answer. It's not, you know, this might be the bottom fishing plan you need. I mean, this is the one that Dr. Delito used. This is the one that I use. You know what I mean? This is the definitive bottom fishing plan. Okay. All right. So we're also going to do 2. Those are going to be recorded, but we are going to do 2 live mastery support sessions. Those are going to be on September 12th and September 19th. September 12th and September 19th. I will be the one answering the questions. So if you have a problem with the course, or if you just want to know more about how to do things right, this is going to be the forum for that. I'm going to spend as much time as it takes in those mastery sessions so that when everybody leaves, it's because there were no more questions that were asked. Okay, and we'll cover it, as well as it needs to be covered. Make sure you know exactly what you need to do. Okay, so 2 live mastery support sessions, and that'll help get the job done for sure. You get 30 days access to VectorVest. If you are not a VectorVest subscriber, we're going to give you 30-day access to the tool so that ultimately you can do some of the homework. And some people say, well, I don't want to do the work. I just want to kind of take the course in and learn. Well, that gets you most of the way there. But there's something to be said for actually getting in there and clicking on a few things yourself. And maybe even straying from the class a little bit and doing a few things on your own just to kind of investigate things. I encourage it. That is precisely what I want you to do. Because what you'll find will be exponentially more important in terms of, hey man, this guy didn't even talk about this, but I used this strategy instead and it did what? Yeah, that's exactly the kind of stuff I want you to see. All right, so bonus session. Special presentation, we're going to do early indicators of market bottoms. We're going to talk about order entry. We're going to talk about how to enter more precisely into the trades when the bottom is happening. We're also going to talk about how you can do that if you're not present, if you're not able to be there. We're also going to talk about candlestick patterns, 3 of the most prevalent patterns that you will find in the 35 bottoms that we've seen before. Almost every one of them exhibits one of those 3 patterns. Okay. And so we'll go carefully through those and make sure that when you see those kinds of patterns, indicators are in the oversold level, that you should be on high alert tomorrow. Right? You should be on high alert tomorrow. So that's really cool. Great quote by a great man, old Abe Lincoln. He said, if I had 6 hours to chop down a tree, first 4 hours I'd spend sharpening my axe. Yeah, I've used this a lot in my lifetime. It's carried me in a lot of different directions, even in sports. Get out there on the dang practice field, Chapel. I know you're good, but you ain't, you got work to do, man. Okay? Certainly could use it for my golf game right now. I need to hit the range about 4 to 6 hours this week. So give me 6 weeks and I'll show you a roadmap to explosive profits. Here's the roadmap again. What I'm going to do is we're taking this price down a little bit. We were able to get some blessing on that because we want to get people in here because the market could in fact bottom here pretty soon. And so, or when it does, maybe it's next year, who knows. When it does, you'll be ready. Okay. So it is going to be 795. We pride ourselves in offering the best stock market guidance anybody can get anywhere at any price. I reckon if you do bottom fishing right on a very small account, you're going to more than pay for this course. That's 795. Okay, that's my best guess for you, but I could be wrong. I don't know. Odds are in my favor though. So we will also give 100% money back guarantee. If you take all the courses, you do all the work, you'll get a refund if you're not satisfied. 100%. Had nobody do it yet. Okay? And I mean nobody. But there's always a first, I suppose. And so that offer is valid. If you're not happy, you will get 100% of that money refunded. 100%. $795 refunded to you. I put a link out in the chat. What I want to know is who am I going to see on September 12th or 19th? Anybody in? Who's going to do it? How much for elite members? The $795 price is as low as it's going. $795 is as low as it's going. Not going any lower. Not going any lower. In fact, past several times that we've done this, we've had people pay the full amount. So I want to cover that. I've had students that have paid the $1,990 in both of the last two times that I've taught this. So I'm going to show you something here. If you click that link that I put out into the chat, a lot of people are saying they're in. That's great. If you click that link that I put out into the chat, okay, what I'm going to do is show you this. Click on register, and when you do that, it's going to ask you for your details or whatever. This buy now bonus, that's good for 48 hours. You guys have the benefit of being class number 1. Class 2 tomorrow is only going to have 24 hours because we're going to pull that buy now bonus off of the website 48 hours from now. Okay. Then you're on the early bird, which is $995. The regular is $1,990. And watch out for, I thought there was some print down here at the bottom. I think it might be on the other page or something. Let me go back here. There you go. Price increases to $1,495 August 30th. So yeah, by Friday, you're $1,495. All right, and then as we get into next week, so it just keeps going up, man. If you wait till next week, you're going to pay twice as much, more than twice as much, actually twice as much. Twice as much. You're going to pay twice as much if you wait till next week. So I'm just trying to help you guys because I've literally have had, and more than one, in each of the last two times we've taught this, we've had people pay the full amount for what, and you shouldn't do that. I mean, you're doubling your expense in this case. Okay. All right. So that's that. I'm so glad so many of you are in. It's gonna be awesome. We have a good group already. I mean, there's a lot of people in the course, so we should have good mastery sessions. There should be lots of good questions. Sometimes I know people are a little fearful of asking their own questions, things like that. Listen, there's going to be this should be a lot of fun. All right, does VV work with Canadian stocks in the TSX? Yes, it does. As a matter of fact, though, if you're a Canadian subscriber, we have something called the VectorVest Canadian Forum or something. I know Stan Heller leads that up in Canada. Stan is a great man. Love that man dearly. He's our director up there in Canada. Anyway, you would probably want to lean on him a little bit in terms of what are the best bottom fishing searches for the Canadian market. I do know that Jailbreak works well, but there are some differences. Canadian market's a lot thinner in terms of enough stocks that they really click along as well. Jailbreak seems to be kind of the answer there still, but I would just hit him up for his thoughts. Okay. So this is what I showed today. If taken literally, is for the U.S. stock market. There are some small differences on things like buy-sell ratio. I believe, because if you look at the Canadian buy sell ratio, it's almost never above one, to begin with. So because it's more of a resource slash banking, um, small amounts of tech kind of economy, right? But anyway, I bought the training. How do I get the modules? Okay, so if you, for those of you that have said that you're going to get email correspondence. Our folks here, basically, they take those orders, they look to see if you're already a subscriber. If you're not, they create you a new account, right? And what they're then going to do is, after they get the account created and billed, they're going to send you a series of emails that is going to give you where the course is located, and how to get started, and information on the mastery sessions, and all of that's going to come by email. So do check your spam folders, things like that every once in a while, because of the volume of emails that VectorVest sends out, and any business these days that use email. Every once in a while you get on a spam filter or something crazy, and we don't know about it till somebody calls in, then we got to call them, and it's this big deal. You know? But so if for some reason you don't get it, check your spam folder. If you're still having trouble, call us up, and we'll resend them. Okay? No worries. Awesome. We're going to have a good time, guys. Welcome aboard. Out of 33 cases of successful bottom fishing, how many have been picked up? How many have been picked up? I'm not sure what that means, Nasky. How many have been picked up? 80%? Now, when I say successful, I mean, made money at all. Now, the thing about this is like with Jailbreak, it's hard to quantify what a successful outcome is in terms of return on investment, because I will say this. I mean, you can get as much as 12 to 18% in a day, um, if you were to close it out somehow. It's tough, man. It's tough to quantify that. What I can say is what I said earlier. When I said, how would I define explosive? The best way that I can put numbers on it is um, double to triple digit gains in days to weeks. Double to triple digit gains overall on your positions in days to weeks. That I feel very comfortable with. I wouldn't make that statement if I didn't. Okay. So it's better than you think. Having tested all the bottoms with all the different strategies, I lost all that data, but I had it at one point, in a product called the simulator that we used to have here at VectorVest. You're looking at, average annualized rates of return that are triple digits. Okay, that's annualized, but that should give you a pretty good clue. That's fair to say. I will never say anything that's not fair. Okay. All right. Let me see what else we got. Does your program work for? Yes, it does work for Canadian. I went through that. Can this be applied to options? Yes. Funny story. Since some of you hung around, let me stop the recording for now. For those of you that hung around, we actually, Dr. Lito and I, we used to travel a lot together, um, and we went to the Money Show in. You guys ever go to the Money Show or the Traders Expos? We went to the Money Show in May of 2009. So that was 2 months after he wrote that essay, "Itching to Rally," right? And there were three people that came by the booth. Richard from Philadelphia. I can't. I'm not gonna. I know his last name, but I'm not gonna share last names. Okay. Richard from Philadelphia. Karen from Phoenix. She was a nurse. Richard was already retired. I can't remember the third gentleman's name anymore. But they were like three amigos, man. They had that kind of their own little investment clique, if you will. Anyway, all of them, they all did options, and they didn't do Jailbreak. They did something else that had a little bit higher prices, but they were doing so well. They were the best salesmen we had. we almost just should have just given them the mics. Yeah, Karen officially retired. She was pretty well. She was pretty close, you know. But yes. But long story short, yes. Can you do options? Yes. Do you need to know something about options? Yes. You need to know how to do your due diligence on option pricing. As you saw, or maybe I didn't illustrate as much as I have in other webcasts, these stocks are in horrific price declines. So volatility is actually going to be pretty high. Um, So the tricky part is going to be getting some reasonably priced options. Okay, and that's probably going to mean that you do, fewer positions and just be comfortable with that because you're reducing your outlay of capital. But but yes, can it be done? Yes. Do I need to know options pricing? Extremely helpful. Okay. All right, let's see what else we got. Just a bunch of people that are in. Where we go here? Point is, okay, I went to that. Let's see. Rather than playing with past numbers, show actuals. Well, I wish I could show actuals, but isn't anything actually happening right now. Else I would. I'd show you exactly what I'm going to buy. I do it every day, by the way, in something called the Jockey Club. But if I go to, you guys are funny, man. If I go to the market timing graph right now, buy sells 0.25, MTI is 0.74. Not there yet, man. And I'm not willing to say that this is a 100% thing here, but I will show this. I've been around the block, man. I've taught it all. I do feel like we've got a little bit more bearishness than bullishness right now. Now, we're living in a day and age where Twitter is a mover, right? So, all of this to say, if we break below the floor, I'm going to be watching these indicators like a hawk and then looking for the explosive day when we get to the right levels. Okay? You know as well as I do that we may never get there. And if we don't, then you don't have a bottom fishing opportunity. And I'm going to be out there buying Chappell's Champs or Smooth Comfort or some of these really selective, high flying, smooth sailing, money making companies. I'm not bottom fishing unless we go lower. Period. End of story. Cool. All right, let's see what else we got. All right, guys. I think that pretty well sums up most of it. How's Dr. D doing? He's doing awesome, man. He's, uh, I'm pretty sure he'll be working here when I'm gone. How's that, Norm? No, he really is. Thanks for asking. He's doing really, really well. I talked to him a few times last week. He's up in Ohio. We're in Charlotte right now. But he's doing really well. I'll pass along. You said hello. Elite price is the same. Elite price is the same. That's as low as we go as the 795. Okay. Let's see. Do we get the VV Special Unisearch access? Do we get the VV Special bottom fishing? Yeah, those bottom fishing, those are in everybody's software right now. But in the course, we go through some of our favorites, and we go through for a reason because they've done the best and even tested the best. Also, you're going to get like our experiences with using stop loss and why we land on the stops that we land on and so on and so forth. Okay, there's lots of documentation and comforting data to let you know that you're in the right spot. Do you need access to the Derby? You do not. You can simply buy Jailbreak, but remember, be careful with Jailbreak. Like right now, Unisearch. So Jailbreak right here. Let's see how we're doing these days. All right, not too bad. So we're getting rid of some of them. It just needs to be more blood. We're just gonna have to do kind of a reality check, when it happens. But that's part of the course. If the bottom happens to be, before we do our final mastery session, I'll be able to hopefully help you through it a little bit. But what I'm looking at is, you just don't want to buy more than two per industry, right? And there are some sore spots in the market that I expect to stay soft, like petroleum and energy, especially clean. Okay. All right, cool. All right, I got to run, guys. Been a pleasure. Hopefully, we'll see you in the mastery session. I can't wait. We're going to have a ball. See you then. Bye.